Order. I want to welcome Congressman Mark Takai, who is joining us today as a new ranking member of this subcommittee. Welcome. I look forward to working with you. Look forward to hearing in Hawaii, incidentally, too. Yes. That might be not a bad thing. Also, I'd like to welcome Congressman Mike Bost, who is sitting in on this hearing today. The topic of today's hearing goes to the essence of what we do as a subcommittee. Since it deals with who we consider a small business, when we ask who qualifies as a small business, the answer to that question has ramifications for all the small business administration. The answer also governs which companies are eligible for the $200 billion in prime and subcontracts each year. The answer isn't necessarily a simple one. A small aircraft manufacturer isn't going to look like a small architectural firm. If you ask most businesses, they'll tell you that they are small, but that the next largest competitor isn't a small business. For these reasons, Congress gave the SBA the ability to decide which firms are small as an industry and which are not. However, we require that the SBA base these decisions in a rigorous rulemaking process. Unfortunately, today's hearing highlights a problem with that process. During the 2012 Congress, the Small Business Committee strengthened the rules governing how the SBA defines a small business. This legislative change, which was signed into law on December 2nd, 2013, was prompted by complaints from industries such as architects, engineers, and technology providers that the size standards did not reflect the reality of who they were in their businesses. However, 2.5 years later, the SBA has yet to implement the changes that were made during the 112th Congress. Indeed, a recent proposal rule ignored these important bipartisan statutory changes. At the time, the committee submitted comments warning the SBA that unless they withdrew the proposal rule, they were courting a lawsuit they couldn't win. The SBA is proceeding with this proposed rule and says it will be implementing the statutory changes sometime next year. In the interim, they are deciding whether the size standards that govern tens of billions of federal contracts each year. Currently, firms in these industries have little recourse. They can sue the federal district court at a great cost of money and time that they can ill afford. I look forward to hearing from today's witnesses about the effects of the SBA's failure to comply with these statutory changes. The subcommittee also welcomes any comments you may have on Congressman Bost's proposal solutions to the problem, H.R. 1429, the Strongest Voice for Small American Business Act of 2015, which passed the House as part of this year's National Defense Authorization Act. The testimony collected today by us will go to the SBA, to the Office of Management and Budget, in an effort to further inform how the SBA is promulgating size standards. I now yield to the ranking member for his opening comments.
Thank you, Mr. Chairman, and thanks for holding today's hearing. Small business play a critical role in America's economy. I come from Hawaii, where over 90% of the businesses are considered small, and more than 50% of the workforce works for a small business. Over the years, Congress has created numerous programs, set-asides, tax preferences, and SBA loan programs to help these small businesses succeed. However, the advantages conferred by these programs have led to heated debate over what is truly a small business and acceptable small business size standards to govern eligibility. The definition of what exactly is a small business has eluded us in many different areas in policy, as a definition may work for a business in one context but may be entirely inefficient in another. On numerous occasions, the SBA proposed a comprehensive revision of its size standards, but the end result was a confusing patchwork of regulation. The Jobs Act of 2010 attempted to clarify these standards, yet in conducting reviews, various stakeholders raised concerns about the oversimplification of the process and questioned whether true small businesses were being left out of the definitions. To address these concerns, provisions were included in the NDAA of 2013 that required SBA to continue its process only if certain data was made publicly available prior to the issuance of any proposed size standards revisions. But for reasons unclear to us, SBA has yet to implement these requirements, and small businesses continue to be disadvantaged by these reviews. Without an accurate small business definition, firms are excluded from programs designed to aid in their growth and allow them to create more jobs. For example, last year, small entities accessed over $30 billion in capital using SBA loans. Many businesses use loan proceeds to keep their doors open, retain employees, and create new jobs. However, firms deemed other than small were precluded from accessing this capital. Not only does this process harm business operations, it impacts federal protections guaranteed to small firms. If a business is not considered small, agencies are neither obligated to review the impact that regulatory changes have on small firms, nor offer alternatives. Most importantly, businesses excluded from the definition are barred from participating in various contracting programs, which awarded almost $100 billion in contracting dollars just last year. On the other hand, if a size standard is over-inclusive, businesses that would otherwise be considered large would be able to compete in these programs, depriving small businesses of contracting opportunities. As previously attested before this committee, small businesses already have difficulty competing in the federal marketplace, with some large businesses already receiving small business contracting dollars. It is vital the size process be fair and balanced. Today we'll hear from multiple people that have been affected by the process currently in place. I want to be clear that we are not advocating for one size standard over another, but rather looking for a transparent process that results in sizes reflective of industry standards. In advance of the testimony, I want to thank all the witnesses for their participation and insights into this important topic. Thank you, and I yield back.
Thank you. Our first witness is Jim Fontana, co-founder and managing partner of Dempsey Fontana, PLLC. He has over 30 years of experience as an attorney specializing in government and commercial contracts. He is testifying today on behalf of the Small Business Value Added Reseller Consortium. Sitting next to him is our second witness, Stephen Charles, co-founder and executive president of IMEX Incorporated. Mr. Charles is the co-author of the Inside Guide to the Federal IT Market, a resource for technology companies interested in doing business with the government. IMEX's group manages the contracts of many small businesses, working with more than 600 value-added resellers. I now yield to my colleague, Congressman Bost, to introduce our next witness.
Thank you, Chairman. And Ranking Member, thank you both for being involved with this hearing today and allowing the participants to, and allowing me to introduce the next participant. Mr. Ronald Rime serves as Executive Vice President of Aculus, Inc., a small business architectural design firm with offices in St. Louis and Dallas. While Aculus is not physically located in my congressional district, many of the employees actually live in the 12th Congressional District of Illinois. The company has also worked on a project in southwest Illinois, which also include projects at Scott Air Force Base. He's testifying here today on behalf of the American Institute of Architects. Mr. Rime, thank you for being here, and I look forward to hearing your testimony.
Now yield to Ranking Member Takai to introduce our fourth witness.
Thank you, Mr. Chairman. It is my pleasure to introduce Mr. Roger Jordan. Mr. Jordan is the Vice President of Government Relations at the Professional Services Council, a national trade association of government professional and technical services industry businesses. At PSC, he is primarily engaged in leading PSC's legislative efforts on a number of issues impacting federal acquisition policy. Prior to joining PSC, he worked for 10 years as Executive Director of the Small Firm Council and the Director of the International and State Legislative Programs at the American Council of Engineering Companies. Welcome, Mr. Jordan.
Mr. Fontana, you may begin.
Thank you. Good morning, Chairman Hanna, Ranking Member Takai, members of the subcommittee. As you stated, my name is Jim Fontana, founding member of Dempsey Fontana Law Firm. I think opportunity, that's a mouthful. These 13 companies have formed a coalition called the VARC, Value-Added Resellers Coalitions. The companies are representatives of thousands of situated IT VARs around the nation. They compete on individual federal agency small business set-aside solicitations or multi-billion-dollar agency program requirements only for small business. The VARC members fall under various programs, including the small disadvantaged businesses, woman-owned businesses, veteran-owned businesses, and small businesses that are located in what we know are hub zones. On behalf of the VARC, I am expressing my support for H.R. 1429, introduced by Representative Bost, called the Stronger Voice for Small Business Act of 2015. The underpinnings of my support are twofold. First, businesses selling goods and services to the government that are certified as small under SBA regulations are subject to the SBA's changing size standards. And as was mentioned, and as you are aware, the Small Business Jobs Act of 2010 directs the SBA to conduct a detailed review of all size standards every 5 years. The only avenue for these small companies to challenge an SBA size standard is for such companies to file Federal lawsuits under the Administrative Procedures Act. The Stronger Voice Act will allow small firms a quicker and much less expensive administrative form to challenge such size standards, as opposed to the mounds of pleadings, motions, discovery, hearing-related documents. At the end of the day, these small companies will be afforded a much less expensive form than going or resorting to full-blown litigation. Secondly, the administrative forum created by the Stronger Voice Act is particularly needed at this time, given the SBA's recent proposed deletion of the 150 employee-based size standard contained under Note 18 of the NAICS Code 541519, which applies to IT VARs. The deletion of this employee size standard would leave only the $25.5 million revenue-based size standard under that code. I say 25.5. That's what the SBA used to do its analysis. The real standard was, at the time, $27.5 million. So I'll just use $27.5 million. I'll mention that the SBA had mentioned to me, we had a meeting with them on March 24th, and I know that they had written a letter to the full committee stating that they would finalize the rules sometime this summer. So there are a number of reasons why this proposed rule with respect to this particular NAICS codes applying to IT VARs should not be implemented and represents a valid backdrop for the Stronger Voice Act. And so in the interest of time, I'll just summarize those reasons. First, the SBA's decision to eliminate the IT VAR employee size standard is based on outdated data that claims that the $51.5 million in receipts under this NAICS code. And just quickly, that assumption is clearly wrong. I have attached to my full statement data where we did a survey of some of the major government-wide acquisition contracts, or GWACs, that show clearly, just on that data, it's not perfect data, but just on that data, that at least 43% of those IT VARs that were considered small will not be considered small if this proposal is put through. And so just doing our own analysis, we find out that that percentage is much higher. I will add that in 2002, going into 2003, the SBA, when they first established this size standard, had concluded, and I will just quote briefly from the language of that proposed notice, quote, "An employee size standard is considered a better measure of the size of IT VAR operations than receipts." The SBA based this conclusion on a very exhaustive and detailed quantitative analysis, but no such analysis was performed under this proposed rule. Frankly, I don't think those numbers are there. I don't think that the SBA can provide any such explanation under any objective standard why the IT VAR business is different today than it was back then. The bottom line is that the proposed rule is not supported by accurate and relevant market data, and it should not be passed. I think that the SBA should consult further with the procuring agencies and affected small IT VARs, as well as this subcommittee. In addition, Congress should adopt the Stronger Voice Act to allow small businesses the ability to administratively challenge these proposed changes to fairly protect their interests. Again, I thank you for the opportunity to testify at this hearing. I would be pleased to answer any questions any member of the subcommittee may have.
Thank you. Mr. Charles? I should have mentioned this 5-minute rule, but We want to hear what you have to say.
Thank you, Chairman Hanna, Ranking Member Takai, and members of the subcommittee. Thank you for this opportunity to testify on issues related to small business contracting and size standards. My name is Steve Charles, co-founder of IMIX Group, where for 2 decades I have worked to help information technology manufacturers succeed in the government marketplace. Since our founding in 1997, my partner and I, IMIX Group has grown into a recognized leader in the public sector IT marketplace, representing more than 250 manufacturers as a distributor to more than 600 value-added resellers, most of them small businesses. We are a top 10 IT 70 GSA multiple award schedule contractor with IT product sales over $420 million in FY 2014. On March 31st, IMIX Group was acquired by Arrow Electronics, a Fortune 200 company, so we are no longer small by any standard. And moving forward, as a public sector subsidiary of a global IT distributor, we do plan to continue our involvement in small business and product procurement issues on behalf of the hundreds of channel partners who source IT products from us. We believe it is critically important for the Federal Government to maintain small business size standards that accurately represent each industry sector and subsector and support efforts to ensure that SBA's review of size standards and NAICS code updates are based on accurate, relevant data performed in a statutorily correct, transparent, and thorough manner. We also support an enforcement mechanism to formally challenge size standards through the SBA Office of Hearings and Appeals, such as that proposed in the Stronger Voice for Small Business Act of 2015, introduced by Representative Bost and co-sponsored by our own Congressman, Representative Connolly. A key recommendation of IMIX Group is for SBA to analyze Federal procurement data in addition to census data as part of the size standard review process. By way of example, we look at the SBA's recent proposed size standards rule eliminating the IT VAR exception, also known as footnote 18 from NAICS code 541.519, which is entitled Other Computer Services. In its proposal, the SBA notes that the lack of data on characteristics of firms involved in IT VAR activities to evaluate the current 150 employee size standard also justifies SBA's proposal to eliminate the IT VAR sub-industry category. Indeed, IMIX Group is not aware of any research conducted to justify this sub-industry. We firmly believe that if a nonpartisan independent review were conducted on orders placed pursuant to multiple award delivery order contracts set aside under the IT VAR exemption, the research would clearly show how agencies' use of this exception to limit competition for the purchase of products has been confusing and misguided, categorizing many billions of dollars, about $10 billion a year, $10 to $12 billion a year, spent for products manufactured by large businesses as other computer services under this NAICS code, while inhibiting the ability of otherwise qualified small contractors to compete for Federal IT product orders. The use of footnote 18 in this way excludes a large segment of prospective small business contractors and violates a contracting officer's obligation to designate a NAICS code that describes the principal nature of the product or service being acquired. According to current statutes, should a mix of products and services be required, the NAICS code chosen is supposed to represent the industry accounting for the largest percentage of the contract price. We believe that for the vast majority of the nearly 60,000 contract actions per year conducted pursuant to 541.519, this is not the case. For these reasons, IMIX Group supports the SBA's objective of striking footnote 18 exception. Our hope is that issues related to eliminating this exception can be resolved in a way that promotes clarity, consistency, and confidence in how socioeconomic policy is being implemented within the procurement system for the purchase of products. Related to SBA's IT VAR exception proposal, the SBA released another proposal clarifying COTS software and the use of the non-manufacturer rule. We support these as well. Every day we see solicitations requesting a quote for items manufactured by a large business that are set aside for small businesses with no NMR waiver, creating a catch-22. Meanwhile, all the dollars obligated count toward meeting the agency's small business goals. We respectfully request that before Congress considers increasing the statutory government-wide small business prime contracting goals, it requests order-level line item data to quantify the extent of this practice across all product industries. In conclusion, we thank the subcommittee for considering these common-sense measures to ensure that SBA conducts size standard evaluations based on relevant data in full compliance with the law. Thank you for this opportunity.
Thank you. Mr. Ryan?
Chairman Hanna, Ranking Member Takai, and members of the subcommittee, thank you for the opportunity to testify today on behalf of my firm and on behalf of the American Institute of Architects on the critical issues of SBA size standards. My name is Ronald Rime. I am an Executive Vice President and founding principal of Oculus Incorporated, a full-service strategic architectural and strategic facility planning, interior design, and move management firm with offices in St. Louis and Dallas, Texas. In addition to serving these communities, we work with a number of federal agencies and do projects all across the country. My firm is grateful for the assistance that the SBA has provided. Our designation as a small architectural practice has helped our company bridge into more complex and interesting and meaningful projects, giving us an avenue to work on private sector work as well through gaining this experience. Our SBA designation also helped us keep our doors open during the recession. During that time, our firm was forced to severely cut staff as our private sector work dropped off precipitously. For the most critical 6-month period, we cut pay 20% for our senior people and laid off staff as a necessary survival tactic. But our federal government work provided an avenue for us to essentially keep our doors open, and the SBA designation truly helped in that. Dramatically increasing the size standards as the SBA proposed in 2011 would create a ripple effect for us, much like the recession, we think. It would just simply change the competitive nature of our industry, opening up the door to much larger competitors in our arena. The SBA proposed lumping together architecture and engineering firms into a single massive size standard that would have effectively defined 98% of the architectural practices as small. Substantially raising the size allowance would, for all intents and purposes, eliminate Oculus's ability to compete for these federal contracts for set-aside projects. It would reclassify mid to large size firms, essentially making David and Goliath the same. Yet competitively, we're very different organizations and companies. The current size limitation provides opportunities for truly small businesses to have legitimate shot at performing federal work and opens a door for us to get in. And gaining access to restricted set-aside contracts is essential for us to essentially have a shot at it. This allows an emerging firm to gain experience with these types of projects in the government arena that allows us to build a portfolio that we then can compete on a more even keel with larger companies, and that's essential for us to be able to survive. You don't get federal projects unless you have that portfolio, and this is the way for us to build it. Had the proposed 2011 size standard been put into place, it's very likely that we would have decided it was just too difficult to even compete for federal work and taken a different direction, cutting off a very vital avenue for us to gain those experiences. The SBA is required to review and adjust size standards only once every 5 years. 5 years of being cut out of this type of work would be devastating to our firm. It's just we couldn't survive that length of time. This is why it is essential that the SBA gets the size standards right. It's also why I'm pleased that members of this committee, led by Representative Bost and Connolly, have introduced House 1429, the Stronger Voice for Small Business Act, giving us this avenue to be able to question and challenge these designations in a more cost-effective manner is absolutely essential as well. Litigation is just not really an option for a small company like mine. I am pleased that the House incorporated this bill into the defense bill, and I hope it can become law later this year. Related to the issue of size standards and how contractor payments are calculated in net revenue of an architectural firm, as much as 50% of our revenue passes directly through our company as the team leaders on these contracts. So it's money that goes to us directly through to our subconsultants. We have very little essentially in that process at all to manage that. To suggest that a firm is not a small business merely because it handles the revenue of these other companies, however briefly before using it to pay other firms, is simply unfair. The SBA could easily address this issue by not counting that money passing through those firms or changing the standard through how it designates small businesses. In conclusion, the SBA is an immensely valuable institution that has helped innumerable small businesses The SBA's vast reach, however, means that even minor changes to the rules and policies can have dramatic consequences for small businesses. Therefore, we ask that the SBA follow the letter and intent of the law and ensure that any size standard adjustments be made to reflect current market conditions. I would like to thank Chairman Hanna and Ranking Member Takai and the distinguished members of the subcommittee. Thank you.
Chairman Hanna, Ranking Member Takai, thank you for the opportunity to testify today. Prior to 2009, PSC was calling upon SBA to undertake a thorough analysis of the size standards, particularly for the 54, or the professional, scientific, and technical services sector, in which many PSC member companies operate. We viewed this review as necessary because it had been years since SBA last conducted a thorough review. SBA began such a review in 2009 by first developing a methodology to calculate size standards based on five factors, only one of which was focused on the federal contracting marketplace. PSC commented on the methodology, which was finalized without substantive change. Subsequently, in March of 2011, SBA issued a proposed rule to finalize size standards for to revise size standards for 36 industries in the 54 sector. For most industries, the increase in the size standards were fairly substantial. For example, most size standards that have been established at $7 million in annual gross receipts were increased to either $10 million or $14 million. That increase provided much needed flexibility for small firms to mature while still having access to restricted competitions. However, for other industries, primarily for computer-related services, that size standard remained essentially stagnant. In our comments on the proposed rule, we raised several concerns and our views remained unchanged. Our concern is that SBA is ignoring the fact that computer-related services has undergone and continues to undergo a significant change over the last 25 years. The Federal Government is purchasing more of these services than at any time in history, and companies across industry are focusing on providing a comprehensive set of solutions to the Federal Government that include a combination of telecommunications, information technology, and other solutions and services. Yet SBA proposed raising size standards for those categories only by $500,000, from $25 million to $25.5 million. Additionally, SBA established a common size standard for a handful of IT-related industries, even though the industry data supported a distinct size standard for some of those industries. For example, SBA's own analysis shows that for computer facilities management services, the calculated size standard was $35.5 million, but SBA still chose to retain the lower common size standard for this category. Therefore, by establishing the common size standard that incorporates this NAICS code and other computer-related NAICS codes at a common level of $25.5 million, SBA has eliminated legitimate small businesses from being able to qualify as such. PSC's comments to SBA focused heavily on this point. However, in its 2012 final rule, SBA declined to adopt our recommendation that common size standard be avoided altogether, or that they default to the higher threshold to avoid negatively impacting small businesses. To this committee's credit, you recognize that reliance on a common size standard could have a negative effect on small businesses, and in May of 2011, a hearing was held on the issue at which PSC provided testimony. Later, legislation was enacted via Section 1661 of the fiscal year 2013 National Defense Authorization Act that requires SBA to justify the use of common size standards. Unfortunately, the NDA language was enacted after the SBA final rule changing the size standards for the 54 sector was complete, and no SBA justification has been provided. Thus, legitimate small businesses have been denied the ability to compete for set-aside contracts since the final rule went into effect. An additional effect is that companies that have been denied the ability to increase their revenues while maintaining their small business size status, they've been denied the ability to increase their revenues while maintaining their small business size status. In computer facilities management services industry, for example, firms that were close to exceeding the $25 million size standard in 2012 would have been able to grow their business to $35.5 million while still being afforded the benefits that come with being a small business federal contractor. The added growth that the higher size standard would have provided to these companies could have eased their transition into the full and open competitive market. Instead, the result has likely been that businesses have either refrained from growth in order to maintain their small business status, or they have had to transition exclusively into the full and open market much sooner than they would have had SBA actually followed its own methodology. We expect SBA to undertake a required review of the 54 sector within the next 2 years. And while SBA should not be allowed to ignore the law in the interim, We are disappointed that they have not proactively made necessary updates. We certainly look forward to SBA complying with Section 1661 at the time of the next review. PSC also reiterates its support for an SBA size standard methodology that gives more weight to the federal marketplace dynamics, or creating a completely separate set of size standards to be used for federal procurement purposes only. Lastly, it is important to recognize that 1661 is one of many small business contracting statutory provisions enacted since 2010. This committee has been vigilant about holding SBA and the FAR Council accountable for implementing those provisions, and PSC shares the frustration expressed at the recent subcommittee hearing about the length of time it has taken to complete implementation. As such, PSC supports efforts to move towards concurrent and collaborative SBA and FAR rulemaking to speed the implementation process. It is simply unacceptable that implementation of enacted small business provisions is taking 3 or more years to fully implement. Mr. Chairman, this concludes my testimony. Thank you again.
Thank you. I'm going to yield the first question to Mr. Bost.
Thank you, Mr. Chairman. Mr. Rime, I'm going to just go right into, I know that you've done work for Scott Air Force Base and Department of Veterans Affairs, but your business obviously works for other projects besides that. How is working on federal projects different than in the private sector?
In the private sector, we compete with large companies and small companies. What's different about it is that the federal work offers us the ability to team with large companies and gain parallel experience along with them. So we prime contracts, for example, where we have large companies as our subconsultants to give us expertise, and it allows us exposure to project types that we would never be selected for typically out in the private sector. Those would normally be primed by large firms, and we might be the subconsultant to them. So, for example, our work with the VA has allowed us exposure to very high-level projects in a planning and oversight role that then has opened the doors for us with our private clients as well. So, for example, our work with the VA has opened up project opportunities for us with local healthcare provider BJC on larger, more complex projects.
Good. In your type of business with architecture, what is the level of competition that is out there, and how many are small, and how many are you going head-to-head with the larger companies?
The vast majority of firms are small companies, but there is a big extreme difference between firms providing architectural services that are independent architectural firms like mine, and larger conglomerate firms that consist of a full array of product services and types, including construction and construction management, all disciplines of engineering, and they're essentially global companies doing it. We're a local company providing local jobs and keeping expertise in the local community, and that's really important. I think that if companies like ours weren't allowed to essentially start and grow and use these types of tools to merge into or emerge as more mature companies, then there would be a separation of really big firms and really small firms not doing federal work, and really almost nothing in between.
Would you say that having the opportunity to compete on that level instead of everybody trying to go against the big dogs without any opportunity like this, beneficial for the taxpayer?
Yes, absolutely. I think that our small firm cost structures for the government we know are lower than large firms. Our overhead structure is lower, so we afford a good value for the federal government in competing on those projects, as well as we are able to put teams together that tap into the expertise that some of these larger firms obviously have, given their size and the number and types of projects they work on, to provide the same level of knowledge back to the government and the quality level of the service. So,
I've got one question for the whole panel, if I can. Have any of you actually had to go through the suit process that I dealt with in the bill, that now you can go, if the bill goes all the way through and passes, that you can go directly to the appeals process to the Small Business Administration? Have any of you had to go through the process right now of suits for any changing of definition of a small business or not?
No, sir.
Okay.
Congressman Bost, I've been involved with lawsuits under the APA, Administrative Procedure Act, challenging agency decisions. Not obviously, you can challenge designations of NAICS codes,
Right.
but not the decision to change a size standard of a NAICS code. So this would be a very new process.
Okay.
But they are daunting and they are expensive lawsuits, like any Federal lawsuit.
Yeah, I know that I have in my district right now a situation with a boot manufacturer that has been a small business and always been rated as a small business, and a lot of the competitors are now arguing, and they're actually smaller than they were when they first got that standard. But I know they're going through that process right now. Thank you, Mr. Chairman. I yield back.
Yield to Ranking Member Takai.
Thank you, Mr. Chairman. Mr. Jordan, in your testimony, you discussed how SBA traditionally analyzes the 5 primary factors when making its size determination. You also discussed the impact of government contracting. You also discussed that the impact of government contracting should be given more weight. Why do you believe this is such an important factor?
Well, the Federal government marketplace is much different from the commercial marketplace. The services and the solutions that our member companies are providing are usually a lot bigger, a lot more complex, a lot more comprehensive. And so we often see larger contracts. We have larger barriers to entry, some government unique reporting and compliance requirements, for instance, that businesses of all sizes must comply with. So you have to be a little bit more savvy to enter the marketplace, which usually means you're a little bit bigger. And back to my point on the size of contracts, I mean, we continue to see some very large contracts being set aside for small businesses, and that's not necessarily a bad thing. But sometimes